Hi, my name is Udit and I work in Germany as a finance manager. In the previous video, we talked about how do you get started on your investment journey. And the most important first step was taking the action, getting your demat account opened and buying your first stock. In today's video, I am going to talk about a very common mistake that we investors commit while starting on our investment journey, and this is asking for stock tips from friends and family members. Recently, one of my very good friends called me, and while we were having this conversation, he mentioned that he has recently started investing in the stock markets, and then he casually asked for a few stock tips from me. There is something fundamentally very wrong with this. Why? I'll give you two reasons. The first is stocks are bought and sold by a person on the basis of the conviction that he or she has in the performance of the company of which the stock someone is interested in buying in. You form a certain hypothesis, you have a certain outlook towards the future performance, and then you make your buy and sell decision. Since this decision is not yours and you are borrowing it from someone who may end up being wrong, you don't have the conviction of holding that stock through thick and thin. And that's why it is not a very good idea to buy a stock on borrowed conviction. Secondly, as an extension to this point number one, you don't know the time frame for which someone is buying the stock. Somebody might be buying it for 10 years long term, somebody might be buying it for a medium term, let's say 1 year, 6 to 8 months, and somebody might be buying it for a very short term, maybe 15 days, 30 days. Since you don't know about the time frame for which someone is interested in buying that stock, the price up moves and down moves, which are an intrinsic part of the market, are going to bother you. And since you'll not be able to process these movements, you will end up selling your stocks at a loss. This is specifically true in case of cyclic stock, where the very sound understanding of the industry is very important. Industries like metals, commodities, and auto work in a cyclic way. And people, the investors who understand these industries deeply, they buy these stocks at the bottom of the cycle and sell it at a top. If you don't understand the industry, you will not have the conviction and you will end up getting stuck at the top of the cycle. There's also a very common operator scam that runs in the market wherein people artificially inflate the prices of the stock and they run stock tips in the market to gullible retail investors. And when this happens, usually the retail investors buy these stocks at top and then these operators dump these stocks and you end up facing a massive loss of capital. So that's why this is the most dangerous thing that you can do with your money, which is asking for stock tips and investing on the basis of borrowed conviction. The conviction comes gradually as you start investing small amounts of money and grow more and more confident. As your confidence grows, like I mentioned in the previous video, you will be able to invest larger amounts of your savings in the stocks that you are interested in. Also, at the same point of time, since you're starting small but you also want to be in the markets, a very good approach is to invest through mutual funds. While you are learning investing small amounts in the stocks of your choice, you can invest a larger portion of your savings in mutual funds, wherein for a very small fee, your funds are managed by professional fund managers who have this as their full-time job. In this case, you are letting them manage your money and also you are learning the whole process. And as you grow confident, as you grow more confident in your journey, you can change the allocation, you can reduce the allocation that you make towards the mutual funds and increase in your individual portfolio. Remember, portfolio is constructed like a library. You don't construct a library by buying 1,000 books at the same time. You buy one book at a time and then build your library. Similarly, build your portfolio on the basis of your own conviction so that you are able to buy and sell at the right time and process the price movements. Remember, If you are investing on the basis of borrowed conviction, on the basis of stock tips, if something goes wrong, which it definitely will, you will end up blaming the other person for your loss. And this is a very sad situation to be in. In markets or also in life, we need to take ownership of our decisions. If we don't own our decisions and blame others, it's going to take us nowhere. So, it's very important to build your own hypothesis and learn the process. This reminds me of a quote which I read a few years back, which goes like, the one who takes a stock tip sees his portfolio dip. So, if you don't want to see your portfolio dip, don't go after stock tips. Also, like I mentioned, it's a lonely pursuit, it's a worthwhile pursuit, and it's also very fulfilling. In your journey of learning about the stocks and investing in them and going through the thick and thin of the market, you will understand more about yourself than the market. So, all the best for your journey, and let's walk together to understand and uncover the great mysteries of the market together. Thank you.